Welcome to CMO Confidential, the podcast that takes you inside the drama, decisions, and choices that go with being the head of marketing. Hosted by five-time CMO Mike Linton.
Welcome, marketers, advertisers, and those who love them, the Chief Marketing Officer Confidential. CMO Confidential is a program that takes you inside the drama, the decisions, and the politics that go with being the head of marketing at any company in what is one of the most scrutinized jobs in the executive suite. I'm Mike Linton, the former Chief Marketing Officer of Best Buy, eBay, Farmers Insurance, and Ancestry.com, here today with my guest, Greg Silverman. Today's topic, marketing valuation, the battle between believers and non-believers, part 3. Greg started as a consultant at PwC. He founded Concentric, a SaaS revenue forecasting company, and was the global managing director at Interbrand early in his career. He has returned to Interbrand recently as the global director of brand economics, extending his time here to 13 years. As you can tell by his bio, he is quite committed to analytics and forecasting. And now Interbrand just completed a major study on the financial value of brands, and we are here today to discuss that topic and what it means to our audience. Welcome, Greg.
Great to be here, Mike. Really excited to spend some time with you.
Excellent. Let's jump right in and start by discussing this study. Give us a brief overview of the process and the objective.
Yeah, so Interbrand's probably known to many people in the audience for producing the top 100 brands report every year. And what we do is we look at brand value and say, how is it improving? What is driving brand value to increase or not? And we were working with a very large insurance company, global, and they were saying, hey, we're not doing well. Our share price isn't doing well, and we can't figure it out. And they asked us to take a look at what was happening. And the insurance industry was being, permeated by private equity. They were buying up insurance companies to generate cash so they can invest it.
Huge amount of cash flow. Insurance companies throw out a huge amount of cash flow until they have to pay it out. But yeah. Yeah.
And they're sitting on assets and they have to keep them there because they're regulated. And there was this big opportunity. And so what happened was when we compared the insurance company to these PE to the private equity groups, we saw that the private equity, the public ones, were trading at twice the share price. But our client was making as much money and had the same business structure. And we said, why in the world is that happening? And so we really started for the research study, and it's called How Brands Influence Share Price, took a look at how did the investment community value brands? Did they consider them? Was it important? What did they understand about it? And we found there was a major disconnect between the communication of a brand strategy, which we're all pretty good at doing to our customers and consumers, but they'd kind of abdicated, and we as an industry had abdicated transferring that messaging into the investment community.
So then you do this study. Tell us how many companies are in it, and then what do you look at?
Yeah, so what we did 2 parts. One part was we looked at data for the S&P 500 and our Interbrand group for the past 20 years, and then started to look at trends amongst that and decided to look at the last 5 years, but just for its relevancy. And then we interviewed over 250 analysts, investors, journalists, people who shape share price across the globe to figure out the mechanics of how they did it and what they understood about brand. So we had a huge data set, and we had quite a bit of primary research to understand the mechanics of what we call the brand value chain.
So this is a huge study with a lot of input, and you're talking about analysts and brands. You're not talking to that many marketers in here. So this is a sideways look at the brand from people that actually are running money, basically, right?
That's right. And it's a great way to call it, Mike, sideways look, because I think as brand marketers, we look toward our market, but the brand is creating so much value. We forgot, or many of us forgot, to look toward the investor community and say, what do we do about it? How do we communicate it? How do we get full credit for it?
So we take this big sideways look, this side look. We're talking to all these analysts, which I think is a super interesting thing. And then we get the results of the study. What did the study say?
A couple of surprises, all of them pretty positive if you can reframe things. So first off, three-quarters of them said brand plays a very important role in the way they value things. They said it's the most important thing they look at after the the financials.
And just to be clear, these are the analysts. And so they look at the financials, and then the next thing they look at is they are imputing a value to the brand.
That's right. Exactly right. But shockingly, 90% of them said, when we asked them the question, I really don't understand brand and how it works. 90%. So that is dramatic. And you think about, are the brand teams talking to investor relations? Are they auditing? Are they tracking perceptions like they do with brand health with those same community? And when we combine the data set and we combine the research, we estimate that 2/3 of the brand in the S&P 500 are inaccurately valued.
Wow.
And that's a dramatic finding, right? We thought it might be a little bit lower, but it isn't. And that's two out of three. And it became very apparent, like the way strong brands can work is that with very simple kind of communications along that network of people, you can get a lot of impact for share price. And I think for marketers trying to get budget and credibility in the C-suite and the boardroom, having that ability to talk to the community, understand the mechanics of it, is a big opportunity to be seen as more effective.
So just to make sure I'm getting this right, 90%, all these analysts say, I value the brand, and I'm putting a value on it in my research. 90% of them have no idea actually how to calculate that value actually. And then when you look at the S&P, there's a whole bunch of brands that are incorrectly valued based on their brand, based on the study. So everyone wants something, but no one can figure it out. Is that a fine way to sum it?
I think that's right. And I think it's overlooked. And my mom's 85. She just moved down near me. I live in Florida. Yeah. We're from Georgia, and she says, Greg, that's just not possible in this day and age to overlook that. I said, Mom, that's exactly it. It's just so simple that we all just overlooked it. And she's like, well, okay, what are you going to do about it? I said, I'm going to write this report and help everyone fix it, because it's just the simplest thing.
So let's talk about how we're going to fix it in a minute, because now you are smack dab in the middle of the believer, non-believer argument. Because the believers are going to say, of course, the brand has value. Brands have pricing power. It drives revenue. It gives you the benefit of the doubt. But tell us the difference between the brands you studied in there that have brand power and the brands that don't. And then we're going to go to the believer, non-believer component here and the analyst and talk about that next.
Yeah, I think the first part of that question is really, what is a strong brand? Like, what makes a strong brand? And we look at it as almost like a matrix of capabilities. So we would say you have a culture that respects it, you have processes that reinforce it, and you bring in the expertise you need to evaluate it. And for a lot of marketers, that means more sophisticated analytics, more forecasting, more business results. But
are all these variables, Greg, sorry for cutting in there, are all these variables objective variables or judgment variables from you all when you look at those variables?
We have quantified that over the last 25 years, right? So we published that annual report, and those can be very objectively scored. Over time, we have a consistent methodology, as do many other consultancies in the world, right? We think that the solution we're talking about is good for the industry, not just good for Interbrand.
Right.
And then the question becomes, when you have those capabilities, how well do you lead your market? How do you stay relevant? And how do you engage with people? And if you think about relevancy and engagement, most CMOs haven't taken the step to put their marketing touch on that investor relations piece of it, corporate comms, and tell the brand narrative while they're explaining the financial results. And that really is the core opportunity that almost everyone can execute if they just put a little conversation internally and some measurement about what's being perceived out there in the market.
I think this is a super important topic. And Actually, in one of my companies, I managed investor relations and was fortunate at a couple companies where marketing was featured with the analysts. But in most instances, you're not going to have the CFO or the CEO want marketing in there. And you're saying that's a mistake.
I think it's a lost opportunity, right? I think it's if you're the CEO and CFO and you're looking for the fastest way to improve your share price, getting credit for how well your brand performs and getting that included in the financial analysts community's evaluation of your company, it is the fastest, lowest cost way to move share price. We've done this now with a couple of clients who've just started to introduce it in their earnings calls, and they're seeing huge lifts in the share price following that call. So I do think it's a tremendous opportunity, and sometimes just the simplest solutions really don't have to change what they're saying. They're just giving a better narrative.
And when you talk about it to the buy side analysts, you're talking to these analysts, and you talk about the brand. What's a best practice for how to talk about the brand, either mathematically or analytically? Because you did say 90% of these people that value it don't know how to value it, and the other 10%, we want to bring them on the show for an interview. So, so if you want to send any of them our way, we'll put them on the show. But tell us what's the best way for marketing to show up with the analysts. I mean,
so I think there's a connection between the decisions that brand marketers are making and their ability to forecast results, right? To be able to say, here's the market share we expect, here's the investment that leads to that market share. And to the extent the company is willing to disclose some of those investments or ideas, you can really move the needle on the valuation. And I think it's drawing simple steps of what we call the brand value chain. We invested in the brand got stronger. Because it got stronger, the role it plays in the decision got better, revenue came for it, and therefore you should expect that the strength of that brand to protect our revenue in the future.
So if I summarize that, this is I'm going to tell you a brand story, but I better back it with math or no one's going to pay attention to it. Right.
We'd make a distinction between a brand strategy and a brand story, because you see a lot of people, sometimes talking about how well they're going to do, but if they can't deliver it, they get wild fluctuations in their earnings, right? You can just look at the Tesla narrative over the last couple quarters where the strategy isn't clicking and how much volatility they got. So I think when you can point to the investments you made and how they're delivering a different type of experience for your customer, that's something that they can quantify when they're doing evaluation.
So a two-part question. I'll go with the first question. In one of our earlier shows, we had McKinsey and the ANA, and they had a study that showed companies with marketing in the center, with marketing focus, were in general more valuable than similar companies which didn't have a decent marketing pillar. You obviously think that's true in general, but any thoughts on that? And then I have a follow-on analyst question.
Yeah, because we've had people ask us that question, right? What that about that report specifically, and I think sometimes what gets confusing to people is when they're talking about marketing, they're not talking about a department or a strong budget. They're talking about everyone in the company being able to answer the question, how does the brand impact my decision making? And so when you get that kind of ethos across the company, you end up with a strong marketing focus, not just a department. So we would agree with it, but we tend to call it a brand focus, because then you can do more than just paid media and comms. You can talk about experience and ambition and purpose and all the things that might be relevant to both internal employees and external customers.
And then a lot of companies, you mentioned Tesla, their earnings are way up and down, so the valuation of the company can move wildly with earnings. Is the brand a constant in there, or does the brand move around? And how do analysts account for that?
Yeah, I think the brand is a constant, but I think the analysts don't understand it, right? Because you can look at like Apple, and people would say, oh, Apple's not going to do well because their sales of the iPhone in China are dropping. But if you look at Apple as an ecosystem, they have all these interchangeable parts, different types of things that I could buy from them. When their iPhone sales were going down, their services revenue was going way up.
Yeah.
And it's a classic example of them not understanding the totality of the business, and probably Apple struggling to get that point across to them as well. Because you can make the case that Apple is actually undervalued because it's been beating analyst estimates over the last 5 years more than it's been missing it.
So we had a show with Seth Matlins on here where he basically said the non-believers will sit there driving in a fancy car to work in a nice suit, like an Armani suit or something, looking at their Apple Watch and on their Mac, questioning whether or not brands matter. But there's all this evidence that says marketing really matters, brands matter. It's a good growth lever. Why are there still so many non-believers in the C-suite or on boards?
Yeah, it's a fascinating, I call it the dysfunctional dyad, right? So the way it's
the dysfunctional dyad. That's big, Greg.
Okay, well, that just means you got two people who really don't understand. Yeah. And so if you looked at, I think there was some research that came out a few years ago that said of the thousands of board seats that are in the Fortune 1000, there was only 26 marketers, 26 out of 1,000. So marketing hasn't moved to the boardroom and been able to have the conversation about return on invested capital and cash flow and all those things. So in one sense, the board has kept marketing folks out, but on the other sense, marketing folks probably haven't done enough to level up their financial game, right? And so it's become kind of a stasis that doesn't work well, right? You've got one group who says, I need to know the business results from you. Another one says, well, I gave you likes, I gave you impressions. And they're like, no, tell us how you're giving us revenue. How are you giving us margin? How you're giving us premium? How you're giving us security? And until both groups open the door from the board and the marketers invest in their financial literacy, that's going to be a problem. I think that's why there's non-believers. There's plenty of evidence that it's true. It's just the marketing folks haven't been able to carry it into the boardroom in the same way somebody might for a call center or distribution center or more retail stores. You know, they can make cases for those capital investments, and marketers struggle to do it.
I agree with that. And I do think marketers should not talk marketing outside of the marketing zone. They should talk what investors want to hear, which is money. So you guys did the study, and Interbrand makes its living essentially selling to a lot of marketers. There's a bunch of skeptics who are going to say, of course, the study that Interbrand ran shows that marketing is important and brands are important. Tell me what you would say to those skeptics.
Yeah, I think the way we saw the report, and even in the report, and what we'll talk about in this show, is a little bit of what do you do? You know, we see the whole thing as like an act of leadership. So when Mercedes-Benz came out with a seatbelt, they didn't keep it for themselves. They said, hey, everybody, you want a seatbelt, right? And they property. I think if we showed up and hadn't published the report, I think there should be some cynicism around it. When we're publishing it and trying to help everybody bring brand into the boardroom, you know, from a financial perspective. And so by just kind of letting it go into the industry and giving people mechanisms for improving that conversation on their own, you know, with things that are probably at their fingertips, you don't have to come to Interbrand for it. We want to raise all boats. And hopefully people see that if every brand was being treated better, all of us in the branding community would be treated better.
Well, that's great. So we will actually attach this study in the comments.
Yeah, let them have it. We want them to use it.
Just like the seatbelt. But seatbelts for everyone, and don't leave home without your seatbelt on. So we have all these studies. What should marketers do with this and other studies? We've already talked about speaking financial, but what should they be doing now?
Yeah, I think there's some very easy steps, right? That when we were imagining the solution and how we wanted to bring it to the industry was, to make it something accessible. So you can call us up, and for your peer group, we'll give you an analysis of how your PA ratio compares to other. That's a free service for all, so that you can say, how well is my brand doing against my competitive set? So I think that's the first thing.
You'll give everybody the price earnings ratio of them.
And their 5-year history and their competitive set. We have that available to everyone so they can go in and say, hey, am I underperforming or not? Or, am I consistent or not? Because those are the big issues that you want to be able to get at. But I think there's a couple other steps they could take, right? One is, I think, some form of internal survey. And I'm not talking like 50 questions. I'm talking maybe 2 or 3 questions where you ask people, I wrote it out, how does brand impact my decision? Maybe qualitative. And how much does brand impact my decision? It could be a 2-question survey to get a sensibility of across all of the management. Are they thinking about brand, or are they just thinking about efficiency? Are they thinking about getting things done? We work with, BMW at one point in time, and every decision that went into a car had to be written into brand narratives. They wanted a new drink holder. The designer of it had to say, well, it meets our brand proposition this way. It meets our purpose that way. So you can be very detailed. You want to get a sensibility of, are people considering the brand, or are they just kind of doing their job? I think the other thing is they've got to bring in the investor comms and the finance team and say, hey, let's try and get some points into our earnings that tell the story of why our brand's strong, why the role of the brand's improving, and why people can count on us as a company to deliver. So, and I think, research it. Talk to your analysts, do a quantitative study with the people who are writing about your brand and your company and saying, do they actually get it? Because I think a lot of times we think they're rational. We think they're spending a lot of time understanding us, but they really aren't. And maybe they don't even know how to.
I am serious. If you have analysts that have a way of evaluating the brand, we'd love to have them on the show. I want to flip this over because we've been talking about how to get non-believers on board and how to do this, but sometimes you're going to run into non-believers that just aren't going to believe in the brand. How your recommendation for marketers thinking about changing jobs, how do you interview to find a place where, as a marketer, you're going to have the chance to do everything you just said? What are some good interview questions or things you should look at to source out, are you going to have a chance to succeed and impact, actually the valuation of the company?
Yeah, I think, I would assume, people moving into a senior position would be, very much talking to the CFO and the CEO during the interview. And I would look for not only their background with marketing and how they've treated it historically, but how do they feel about it now, right? What's their kind of attitude? Do they see it as an investment that gives them a revenue generating opportunity, or do they see marketing and branding as a cost center? Because if they talk to you in terms of cost center, it's going to be a struggle, right?
It's going to be really, really hard. And the other thing I would go along with that is, is the money under your control completely or someone else's? Because if it's under someone else's control, it's probably not going to be good for you.
I can't tell you how many CFOs are indirectly running marketing departments and they don't know it, right? Because they go, oh, hey, we want 6% sales growth, and this is how much money we should spend on brand, on advertising based on our industry, and they give the marketing and the brand team a budget without any sophistication on it because it works in a spreadsheet. So I think if they're talking about, we want to explore, we want to use data, we want to do forecasting, because I think the central skill that you have to be able to bring now as a marketer is the ability to say, for this investment, I forecast this result.
Yeah, and that to me is spending to an outcome versus a cost line.
That's right.
And I think the biggest argument you should have or discussion on the way in was, are you managing me as a line item, or are you managing me as a growth source? And yeah, sometimes you have to give money back, but if you're a line item, you are always one of the easiest line items to cut because you're available and a lot of your stuff is short term. How do you write in? What do you recommend marketers do with the investor relations team, which is usually reporting into the CFO? What do you do there?
Yeah, it may sound oversimplified, but first you got to start talking to them, right? And understand, well,
I love investor relations. I think it was fabulous. So
yeah, but I've been in a room where CMO said, "You want me to talk to them?" I was like, "Yes, I want you to talk to them. They're your voice to them." We never met. I was like, "Yes, that's why we are pointing fingers at each other and say, why don't y'all have lunch?" And they can start talking about what their issues are, but the brand team can say, "Here are the things that make the revenue result we have and the revenue estimates we have more believable. Here's why we think this is happening. Our brand equity is going up. We're adding more customers in new markets. We're moving to different arenas." And somewhere there's an equilibrium between what the brand needs to say and converting that into something that convinces analysts that the forward revenue stream is more secure and bigger, because that's what's missing in these inaccurate valuations. People aren't seeing that the brand is actually protecting revenue, and in some more advanced companies, moving from a cost center to a revenue generating engine.
Got it. I think that's a great wrap to that line of questioning. So we're running towards the end of the show. So last question, it's a two-parter. You have to take one or both, but you have to take at least one. Funniest story you can tell on the air or piece of practical advice to our listeners that we haven't discussed yet. One or both, your call.
I think I have one story that might do both. So
all right.
At the top of the show, I mentioned this insurance company we were working with, and the investor relations group was so convinced that the analysts knew everything about their business, that this was a pipe dream, Interbrand is overstepping, whatever it was. We said, okay, well, why don't we go research it with them, how well they understand your company. So we got a global study going, and we did all the work, and it came back that the number one thing that these analysts thought about this insurance company was that they were great at retirement planning. There was only one problem. They sold the retirement planning business 3 years ago. and it's like, that's my point.
That is not a predictive revenue stream. I'm just saying.
That is exactly right. And so they were judging them on a business they no longer held because somehow the perception didn't follow the reality. And so that's my piece of advice. Make sure that the fundamental assumptions of how you're being judged are correct. And if those aren't producing the results you want, well, then change your strategy. But before you change your strategy, make sure everyone understands that they understand it, right? I mean, that's probably the funniest thing. And they were like, okay, we'll change, right? Now the brand team.
That was a pretty good piece of data.
Yeah, that's really not data. It's an observable fact.
Yes. All right. Well, thank you for being on the show, Greg. And thanks to everyone for listening to CMO Confidential. If you are enjoying the show, please like, share, and subscribe. Look for all of our shows on Spotify, Apple, YouTube, and the I Hear Everything Network, which include Marketing, The Battle Between Believers and Non-Believers, Parts 1 and 2. Is the CMO position the hardest job in business? The case for customer lifetime value. Why is this thing so hard? And is artificial intelligence an extinction event for agencies? Hey, all you marketers, stay safe out there. This is Mike Linton signing off for CMO Confidential.